back to some fundamental opinion on the market. We caught up with Ravi Dharamshi, CIO at Value Quest Investment Advisors, after our market town hall. Got his views on the way forward for the market, as well as, of course, expectations from the budget.
I think we are in the midst of a bull market, and it's driven by fundamentals, it's driven by earnings, it's driven by a deleveraged corporate sector, and corporate earnings are keeping track of the market. So yeah, of course, we'll probably move a little ahead of earnings from every now and then, which might be a cause for correction. But I don't think there is anything that is going to change the structural nature of the market.
Any cause for worry, given that we've not had a meaningful correction in almost 3 years now? I mean, post-COVID, it's been a one-way rally with very short and shallow corrections.
Yeah, absolutely. It's been 4 years, not even 3 years. It was March 2020 and we are here in July 24. So clearly, correction at some point of time will be there, and it will be a deeper one. And I don't know what will cause it. Is it going to be something in budget? Is it going to be US election? Or is it going to be just the supply of paper that absorbs all the money that is coming into the market? Any or all of these can cause the correction, and I wouldn't rule out. Just the law of averages suggests that at some point of time in next 6-12 months, we should have a deeper correction. But the bigger point is it will be a correction and not a reason for you to be out of equity as an asset class. I think the longer term wealth creation journey will still continue. Use that correction whenever it comes as an opportunity to start building longer term portfolio.
Absolutely. Allocating money at all-time highs is always a far more difficult task than to put it to work when the market is down. So for anyone who's looking to enter now, because you don't want to miss out waiting for that elusive correction, what would your advice be? And what are your go-to sectors where you think there's still some reasonable, risk-reward, equation which you can work with?
So, clearly, the first thing, if you are not allocated or under-allocated to equities, is to get allocated. I don't think that is going to change. However, this is not the time to be building, going whole hog and building a portfolio for a 5-year, 10-year period. There will probably be a better entry point. In terms of sectors, I think this recovery post-COVID has not been exactly even. So there are sectors like rural consumption-oriented, agri. There are chemicals, which has not done well for the last 3 years. There is IT services, some platform companies. All those kind of things are probably due for a reversion to mean kind of a trade. But my lookout will probably be where the structural change is happening.
Well, the run-up to the big event, the union budget, there's a lot of chatter around possible tax changes and what the preferences will be for the government. What's your take?
No, I don't think equity as an asset class is going to be disfavored or unfavored by the government. I think we'll continue to, keep the tax rates that they are. It would be foolish on my part. It would be foolish on the part of the government to actually tinker around at this stage of the cycle where the private capex is about to begin. I would, of course, there is a problem to be solved in terms of the banking deposits, which are actually running dry. So maybe some amount of incentivization on that part, but not taking away from the equities would be a fine balance that I would be looking for. Second thing that I am looking for is how they manage the the pulls and push of the coalition government. Is there a need to, are they doing a hard turn towards consumption-oriented and welfare-oriented sectors, or is it just going to be a lip service paid and continue on the supply side reforms on the capex side? That is two monitorables for me for the budget, but I would expect it would to be more of the same with just a little bit on the incremental side.
All right, that's the view from Ravi Dharamshi on the market as well as budget expectations. So we will